Good morning, everybody. And happy Monday. It is February the 2nd. So this is our first set the market morning call for February. I'm glad we're past January. January is a bit of a pain in the markets, as I think many of you have probably noticed. But we're here in February. We made it through January, so that's something to celebrate. And I think we are at a really good spot now to kind of see where we might go from here with a little bit more clarity than when we had before. We'll start off. We got a whole bunch of stuff to talk about today. We are going to start off with a quick look at Bitcoin because I think it's a good risk metric. So we'll do that. Then I do want to go through global markets. We'll look at the S&P as well. We'll look at the DAX, the Hang Seng. We'll look at industrial stocks, Microsoft, Micron Technology. And of course, we are going to talk about silver. So a lot to talk about. It is a Monday morning, usually a bit of a thinner crowd on Monday morning because people who don't do this professionally tend to be a bit busy on a Monday morning. So that's why we also record these things so people can watch this a little bit later on today or, hopefully today. So if you are here for the first time today, welcome. Good morning or good afternoon, depending on where you are. This is our Set the Market morning call. We're going to get started here. We're going to spend about 10 to 15 minutes going through the tape, some of the things that we're looking for. We have a lot more earnings today, this week, I should say, excuse me. So we're looking forward to that as well. If you are here for the first time, please make sure you subscribe to the channel. Just below there, it should say subscribe, or somewhere on here you can subscribe to the channel. That allows you to be updated in real time when we go live with analysis. That way you don't miss anything. And of course, as always, give us a thumbs up, like on all the videos, including this one here right now. That way we can continue to do the show without having to stop it. Okay, so let's start off with the price of Bitcoin. And this is, again, we do this just because of the sort of liquidity and risk metrics, risk appetite metrics, excuse me, I should be clear. It's a very simple line, and it doesn't really tell us all that much, except for the fact that it's been, something that gravity acted as gravity, as a magnet. So if you look at Bitcoin now objectively, and I know a lot of people don't like to admit to these kind of things, it's actually at the same spot it was now in March of 2024. So not quite, but almost 2 years of zero performance, right? If you listen to some of the talking heads on TV, they were having all sorts of fantastic numbers out there. I too would have thought it would have been higher, but I think we adjust to the market reality, and I know a lot of you guys appreciate that. We've been having a complete shift in terms of the trend in Bitcoin and, of course, the shorter-term momentum. We've been very clear about that. If you follow, if you receive our Bitcoin bracket, which is a weekly Bitcoin report, comes out every Monday, and we update people on the trend, the longer-term stuff, and the shorter-term momentum. And anyone that follows that should absolutely not be in any position where they're overly long Bitcoin here in any sort of short-term fashion. In fact, Bitcoin flipped back to short-term bearish a couple of weeks ago. So it's a pretty important level, I would say, at least psychologically. The sort of mid 70s, 80, maybe low 80s $1,000 level on Bitcoin. Again, haven't been able to really sustainably stay above there. Well, I guess we did, but ultimately we're now back at it. So I would look at this, watch this very closely. If we have significant bounces from here and we can overcome 100,000, I think ultimately then that'll be new wind. Of course, we will then get more fresh momentum, and then maybe the resumption of the long-term trend. We shall see. Right now, it's both bearish long-term and actually has been bearish for some time now from a shorter-term trend perspective. Again, if you receive our Bitcoin bracket report every Monday, you obviously have been on top of that. But I thought I'd update you in this. Quickly looking at global markets this morning. So if you look at, for example, what's going on in Germany. Okay, so this is a daily chart of the German DAX. The German DAX this morning's up 1%, right? And there's a lot of headlines this morning of people being very concerned about this, that, and the other. But the reality is the German DAX it too hasn't, by the way, hasn't done a whole lot. I mean, the DAX is maybe a little bit higher now, but it's more or less at the same spot it was in July of last year. So it hasn't really done a whole lot. And that's actually true for a lot of the indices. But nevertheless, we're getting a bounce this morning along with the dollar, which is bouncing as well. So a little bit of risk on this morning, meaning like risk appetite is back. If you look at what's going on in Hong Kong, those shares are actually down 2.23%, but that was largely a reaction to the U.S. markets on Friday. I think if you look at the futures, let me see if they have already recalibrated. Yeah, not much, but so that's what's going on there. That's a bit of a lagging indicator in my view. So we'll take that as it is. So that's a look at those indices. Let's look at the S&P 500. I'm going to show you as the futures contract here, the E-mini one. So it takes into account this morning's price action. And as we've been saying now for some time, it's just a little bit boring on an index level. So the S&P is now, more or less back to where it was in October, hasn't really done anything. And what's really happening underneath the surface in the S&P is that there's a lot of stocks are fighting a really good fight. Industrial stocks, Caterpillar, those kind of things, financials. The trouble is that the tech sector hasn't been able to keep up, and we've been showing this, right? I'll show you this in another chart in just a second. So we've been making this case now, and I think this is critically important for some time, that it's mathematically, if not impossible, it's at the very least very difficult for the S&P 500 mathematically to have a lot of gains from here on going forward for probably multiple years, unless the tech sector, those really huge companies, have at least participate as much as the market, and they haven't. So there's been a ton of fighting and really good performance underneath the surface in other stocks, but the S&P itself, because of the heavy weight towards a few stocks, just hasn't been able to go up. And in fact, we're going to talk about this. We're doing a state of the market today. We did one on Friday, but there's so many people that wanted to see it again or couldn't join on Friday. So if you guys want to join us for the state of the market address, it's actually going to take place today at 11 Eastern. My colleague Christian just put it into the chat box. So if you guys haven't had a chance to watch the State of the Market, we can do it again today at 11 Eastern. So that's 8 o'clock Pacific. It's very well attended. I think we actually maxed out the room on Friday. That's probably partially why a lot of people couldn't come. So if you want to join and watch that, we go through a lot of things, including some of the things I just touched on, why the indices can't go higher, what might be the performance going forward. So make sure that you join us on that today. It's totally free. Just register on that button right there. Again, the link is in the chat box. So join us for that. That would be, I think, a good way to start the week. Before we go on to silver, I do want to just touch on two stocks. So one of them is Microsoft. And, again, it's one of those things that people don't want to hear about these things, but it's just factually true that really Microsoft hasn't really done anything for 2 years. So here, if you draw a simple horizontal line 2 years back, you can see for the most part, Microsoft's at the same level it was 2 years ago. Almost, exactly. And so, again, it's not something people want to hear, but it's factually true that Microsoft hasn't gone anywhere. So this is my point. Like, if the if the huge mega cap tech stocks like Microsoft act this way, mathematically, the S&P is very difficult to be able to go higher. And it's one of the things we address in the no pun intended, the state of the market address today, because it requires probably quite a different portfolio going forward in our view through the lens of research and education here. Remember, no investment advice given here. Okay, so join us for that if you can today. I think it really help you to kind of put things together. At least listening to our research for what it's worth. That's Microsoft. Another stock I'd like to point out, and this is now a bit of a different point, but let me just quickly point out a couple of things here. So if you look at, I'm just going to quickly annotate this chart just a little bit so you can kind of see what this looks like. So Micron Technology is currently trading, I believe it's 150% above its 200-period moving average. Let me see. Sorry, if 50%. I think it's if you go from the bottom up. So if you go from the bottom up, it's 150. Let's call it 140% above its 200-period moving average. Micron Technology. This is the kind of stock, not because it's a bad company, it's a good company, but that has definitionally gone vertical. right? Now the next earnings report is actually not coming up until they reported earnings in December, and so the next their off cycle is not until April. So this is the kind of stock I want to watch very closely, because I do think this is the kind of name that could cause an issue in some of semiconductor land if there's mean reversion. It's not that there's nothing fundamentally wrong with the company, although I'm sure people will find a reason for it if they want to sell off. But I'm starting to notice some of these stocks that have, again, Micron, just a huge, huge move. So it's the kind of stock that if I'm looking for a short or something to kind of balance out my long book, that's the kind of name I'm looking for here selectively as a hedge, so to speak, right? It's not something I need to go crazy on the short side, but 150% above its 200 period moving average, or 140% is a lot, right? So I think we need to be intellectually honest about that. So if you're looking for a stock to maybe look at, again, just I'm putting it out here for what it's worth, which gets us to silver. So here is the situation with silver. I don't know if you guys remember, we've been making a pretty big deal for the past 2 weeks that silver was getting very overbought. Hopefully many, if not most or all of you heard us talk about that. We talked about, we used our Vertical X Pro indicator to tell us also that. Let me quickly, before I click around here too much, let me quickly go back to it so I can show it to you in a different way. If you give me just 1 second, I should be able to show this to you a little bit better. So we also showed you the extreme overbought readings in gold, right? That was a particularly important, and that was kind of a hint that silver was likely overbought too. Sure enough, gold's about flat now this morning. The futures market is, but obviously on Friday, the GLD ETF, if that's what you're tracking, was down about 10% on the day, and which gets us to silver. So I'm going to make this a full chart so everyone can see this. Here's the price of silver. Now, what you can see is the price at the top is the actual absolute price of the price of silver. I added a yellow line here, which is the 50 period moving average, just as a reference point. And you can see we've mean reverted to it back now. I don't know what we do from here, but obviously, we've now dropped, and this is important, 40%. So silver is corrected at the lows this morning. 40. Silver had corrected 40% over the course of 2 trading days. Right now, we've warned about this. It's not meant to be a pat on our back. It's just factually when something is volatile as silver has moves like this, it is going to mean revert. So basically, where it was earlier this morning was the same level it was on basically Christmas Eve. Okay, so everyone that got long and chased silver basically got their asses handed to them over the past couple of days, and that's typically how these kind of things tend to play out. Now, aside from having our Vertical X Pro indicator, which I would really ask everyone to consider getting, because it told us all these things were extremely overbought. What I would point out is if you look at something like silver, and I'm trying to find that chart again. Where did I just put it? Silver here. One thing you can do, you can use something called the average true range. The average true range essentially is the line at the bottom. It's this red line, and if I'm going to zoom out a bit more, basically we use a 2-week average or 14 period average true range. It's the daily average movement range on a 14-day average. And you can see that with silver's big rally, the average true range went completely ballistic. It went from an average, daily range on a 2-week average of about 0.8 to like just before the crash the other day about 6, and now it's at like 10, right? So when an asset like silver goes vertical like this, then you are going to have to expect some mean reversion like this, right? So that's, I think, very important. When you look at silver, one thing you can do is you can look at silver futures, you can look at silver spot, you can look at the SLV ETF, and whichever one has these signals, like for example on the Vertical X Pro, then that's the one you want to honor that. Remember, silver is not like a stock. It doesn't just trade from 9:30 Eastern to 4 p.m. It trades around the clock, depending on what you're looking at, the futures spot, and so on and so forth. So it's a global asset, and you have to take that global trading into account, just like Bitcoin. Well, Bitcoin's even more extreme. It literally trades 24/7. So you got to take that into account. Okay. And then GRC says SanDisk is SNDK. Exactly. SNDK is almost exactly the same situation. If you look at SNDK, let me go to it here. You can see SanDisk also completely vertical, right? In fact, I can show it to you here, maybe a bit better with the average true range. So SanDisk is another one. So, and there's a whole bunch. I mean, another one that we've been putting out to clients is KLAC, right? This one corrected 15% on Friday after people chart chased it. So that's what's going on here. So hopefully this helps you a little bit with context. I made a separate video on silver that's going to publish here later on today. You guys can watch it here on YouTube. It's maybe a bit more detailed, but the long and short of it is we remain bullish on gold and silver on the long term. It's just it got very extreme. It got overbought, and we think it's important to take into consideration the volatility of an asset and thus the mean reversion capability. For what it's worth, whether it's gold or silver, I think we're going to undergo a consolidation period here. I think a less likely scenario is for us to just go right back up. I don't think it'll be a 2-day 40% correction in the case of silver, and then we're gonna blink and be right back at highs. I think this is now a consolidation period. I don't know how long that consolidation period lasts, if it's a number of weeks or months, but luckily we don't have to worry about it because we have trend following, right? We know the long-term trend remains intact. The short-term momentum is actually still bullish. But also got extremely overbought, right? So we don't want to chase it at this point. I'm considering maybe nibbling a little bit on silver. I haven't had any silver for about a good month and a half or even more. This might be a spot. I haven't made up my mind yet. I'm certainly not. I'm not going to make big decisions on a Monday morning, but certainly a better spot to look to buy than it was, let's say, 2 days ago. I think we can all agree to that factually, at least from the price action. So that is that. Again, if you haven't had a chance to join us in the State of the Markets, I would encourage you to join us today, Monday, February 2nd. It's 11 o'clock Eastern, 8 o'clock Pacific. Looking forward to see you guys there. You can sign up right there on that link. The link is in the chat box. My colleague Christian put it in there. We're going to go through a lot of the macro stuff, our outlook for the first quarter, first half, a whole bunch of stuff like that. So make sure you join us there. See you guys in a little bit. And until then, have a great morning or afternoon, depending where you are. And at the latest, we'll see you guys back here tomorrow morning.